Finance Minister Lim Guan Eng says the government is not discounting bringing forward its stimulus packages in light of the Wuhan coronavirus outbreak, but only if really necessary. Originally, the packages were to address risks from the US-China trade war. However, Lim says it may be too early to revise Malaysia's GDP forecast of 4.8% in 2020, pending a more detailed study of the overall impact. This comes as Thailand revises its GDP forecast down to 2.8%. Lim says that the big difference is that Thailand welcomes some 11 million tourists from China annually, compared with 2 to 3 million in Malaysia. For now, Lim acknowledges that the main sector that will need assistance is the tourism industry, as it will be severely affected by this episode. World Bank East Asia and the Pacific VP Victoria Kwakwa says the World Bank is still assessing the economic impact of the outbreak on the global economy as it works with partners to track the latest developments and provide support if needed. Earlier today, the World Bank Group announced that it has entered into an agreement with the Malaysian government to extend its research operations in the country for another 5 years in 2021 to 2025. Lotte Chemical Titan Holdings' fourth quarter net profit skyrocketed to 187.8 million from 7.2 million previously, thanks in part to a one-off disposal gain and a lower write-down of inventories. This as revenue dropped 15.5% to 1.97 billion ringgit. The one-off gain came from Lotte's equity sale in LACC LCC to Eagle US2 for $33.2 million. No dividend was declared for the quarter, but Lotte said that it would make an additional announcement at a later date. For FY19, net profit dropped 44% to 439.7 million, while revenue also declined by 8.7% to 8.4 billion ringgit. Lotte says this was due to a notable drop in average product selling prices that was partly mitigated by a boost in sales volume. Moving forward, Lotte warns that the industry will remain challenging as question marks remain over global growth due to geopolitical concerns. President and CEO Dr. Lee Dong-woo says that despite current uncertainties, Lotte will continue to focus on key growth strategies and is actively pursuing further growth opportunities locally. Bursa Malaysia saw a 12.2% drop in fourth quarter net profit to 45.5 million as operating expenses rose. Revenue for the quarter was fairly flat, creeping up 0.3% from 128.9 million to 129.3 million ringgit. The stock market operator declared a final dividend of 10.4 cent per share, bringing its total payout for FY19 to 20.8 cent per share. As for its full year report card, net profit dropped 17% to 185.9 million, while revenue declined 8.6% to 502.5 million ringgit. The increase in OPEX came on the back of higher marketing and development expenses as Bursa continued its efforts to market and engage initiatives to attract new participants. Bursa CEO Datuk Muhammad Umar Swift said in a statement that FY19 proved to be relatively challenging following a long period of strong growth. He adds that despite this, Malaysia continues to demonstrate long-term growth and offers compelling investment opportunities. Muhammad Umar says that the positive trend among small and mid-cap counters are also opportunities for it to build on. Scoumi Group's wholly owned subsidiary Scoumi Engineering has been wound up by the High Court today. As such, the court has appointed Messrs. Rogers Reedy & Co. as the liquidator of SEB, with costs to be paid out of the company's assets. In a boss filing, Scoumi said that the winding up of SEB will not have a financial or operational impact on the company. Scoumi added that the assets and liabilities of SEB and its subsidiaries have been deconsolidated from its books as at June 30th, 2019. Scoumi is also not intending to contest the winding up order on SEB. To recap, SEB had been served a winding up petition by Gemilang Coachwork on November 15, 2018, with claims to the tune of 7.17 million ringgit. Primary Industries Minister Teresa Kok is set to engage with 4 European countries next week on the direction of the Malaysian oil palm industry to address the widespread anti-palm oil campaign in the continent. Bernama reports that the one-week visit involves the United Kingdom, Spain, the Netherlands and Belgium. Kok says part of her mission is to emphasize Malaysia's stand on the importance of environmental conservation efforts. She adds that she would outline the country's 4 new directions, namely limiting oil palm acreage across the country by setting a ceiling of 6.5 million hectares, as well as imposing restrictions on new oil palm cultivation on peatlands.